Everybody keeps talking about AI like it's just ChatGPT and robots, but what they're not telling you is this. Companies are about to spend $2.5 trillion on AI this year, 2026. That's infrastructure money. And when that kind of money starts moving, entire economies begin to shift. Careers shift, market shift. And if you don't understand what's happening underneath the headlines, you'll miss the wave. So I'm about to put you on game for real. Today, we're connecting 5 big stories. Number 1, the $2.5 trillion AI spending surge. Number 2, India's $210 billion AI push. Number 3, Saudi money pouring $3 billion into Elon's AI. Number 4, the Fed and rate cuts. And number 5, why tech stocks are swinging. And the key word connecting all of it is capital concentration. Now, let's start with the foundation. This isn't apps getting smarter. This is governments, corporations, and tech giants building the digital highways of the future. Data centers, chip factories, cloud infrastructure, AI compute farms. This $2.5 trillion isn't going to influence us. It's going to NVIDIA-type chip makers, semiconductor fabs, server manufacturers, and cloud providers. That's real money flowing into real infrastructure. When infrastructure spending rises, that's long-term positioning. And when companies spend that aggressively, they expect domination. But here's where it gets interesting. America isn't the only one spending. India's largest corporations, Reliance and Adani, they're not sitting back. They've committed over $210 billion towards AI and data infrastructure. Now, that's not small. That's positioning India to become a global AI and data hub. Now, why does that matter? Because power shifts when capital shifts. If India builds massive data centers, tech jobs grow there, startups rise there, global influence increases there. And for young people watching from the U.S., it means opportunity is global now. Tech dominance isn't guaranteed anymore. And speaking of global money, let's talk about Saudi Arabia quietly stepping into the game. Now, Saudi Arabia's sovereign AI firm just invested $3 billion into Elon Musk's AI venture XAI, converting shares tied to SpaceX. Combined valuation is about $1.25 trillion. When oil money moves into AI infrastructure and space tech, that means governments are hedging the future. Oil built their wealth, but AI might actually preserve it. Now, this is long-term strategic capital, not retail trading, not meme coins, but really strategic positioning. And when sovereign money enters tech at this level, markets start paying attention, which brings us to Wall Street. All right, here's the tension. Companies are spending trillions, but profits haven't caught up yet. So markets swing. Tech drops, tech rebounds, investors rotate into energy, then back to semiconductors. Wall Street is asking, when does this spending actually turn into earnings? Now, if earnings lag behind spending, the stocks wobble. If AI shows real productivity gains, the stocks surge. And that's why NVIDIA and semiconductor stocks keep driving indexes. See, they are basically the shovel sellers in a gold rush. But none of this operates in a vacuum because the Federal Reserve still controls the temperature. And right now, markets are pricing roughly a 50% chance of rate cuts later this year. Why does that matter? Because interest rates affect borrowing, mortgage rates, business expansion, and stock valuations. When rates fall, money gets cheaper. Tech valuations rise, and risk appetite increases. Now, when rates stay high, growth slows, debt gets heavy, and speculation cools. So while everyone is obsessed with AI, the Fed is still pulling the strings quietly. And rate cuts can fuel tech rallies. No cuts, and the markets stay cautious. Now, let's zoom out. Here's what's really happening. Corporations are spending trillions. India is rising as a tech power. Saudi sovereign money is buying into AI dominance. Markets are volatile because profits haven't caught up to spending yet. The Fed is controlling liquidity in the background. And this isn't random. It's a global repositioning around AI infrastructure. The next decade isn't about apps. It's about who owns the compute. If you're watching this, the play isn't just buy tech stocks. The play is understanding where capital is building foundations. Foundations create empires. And remember, this is not financial advice. Just my opinions and my thoughts. Peace.